Is it better to have a smaller slice of a growing pie, or maybe a bigger slice of a pie that might not even exist tomorrow? That's really the billion-dollar question facing investors in NIO Inc. today. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Using our research captured on September 12, 2025, we're diving deep into the electric vehicle world of NIO, ticker NIO, to unpack what's really happening under the hood for you.
Yeah, and it's interesting. The whole market context here is pretty key. We're seeing a mixed open this morning. Futures a bit downbeat, actually. And while, forecasts are suggesting we might sidestep a full recession, there are these whispers of stagflation starting. That's high inflation, but stagnant growth, a tough environment.
Right, not exactly ideal for selling expensive items like EVs.
Exactly. It seems like high-income spending is holding things up, but we've got the Michigan Consumer Sentiment Report coming later today.
Sure.
That's crucial. It tells us if the average consumer, the potential NIO buyer, is still feeling confident enough to spend, so that backdrop matters for NIO.
Okay, so that's the big picture. Now let's zoom right into NIO itself because, well, there's some major news. And for shareholders, it probably feels like a bit of a gut punch. NIO just announced a $1 billion equity offering. They're printing over 180 million new shares.
Yeah, that's classic dilution. Your slice of the pie just got smaller.
Right. And unsurprisingly, the stock took a hit on the news. But, there's a strategic angle too. This shores up their balance sheet. It gives them cash for important R&D, expanding that innovative battery swapping network they have. Plus, their new ES8 model is launching next week, so there's news flow too.
True, but it's hard to ignore the valuation signal. Our fair value analysis, looking at the fundamentals, puts it around $6.07. So at the current price, it looks, significantly overvalued.
And Wall Street seems completely torn on this. It's basically 50% saying hold, but then almost the other half, 46%, are still saying buy or strong buy.
Yeah.
It's really divided.
It really is. And that division creates this sort of tale of two cities when you look at investor sentiment. It's quite stark in the options market. It's almost euphoric bullishness. The put-to-call ratio is incredibly low, 0.27.
Wow. So very few bets on the price going down compared to bets on it going up.
Overwhelmingly betting on upside, yeah. And that $6 strike price seems to be this key psychological battleground everyone's watching. But then you contrast that immediately with the short sellers.
The bears.
Right. A significant chunk, 11.66% of NIO's available shares, are sold short. That shows deep-seated pessimism from a large group betting the price will fall. So you've got this extreme optimism and options clashing head-on with really strong bearish bets. It's like a powder keg situation.
A powder keg, yeah. That's a good way to put it. Extreme optimism versus deep pessimism. So with these forces clashing, what are the technicals telling us? Do the charts offer any clarity here?
Well, the technical picture is frankly also conflicting. Adds to the confusion, really. The long-term trend, if you zoom out, is still technically positive. There's an underlying upward drift. But the short-term indicators, they just flipped negative, suggest the recent momentum has stalled out.
Okay, so long-term positive, short-term negative. What about volume? Are people buying or selling?
Volume is actually one of the more bullish signs here. We're seeing pretty consistent buying pressure, even on down days. It suggests, maybe bigger players, institutions perhaps, are accumulating shares quietly.
Interesting. Accumulation happening. But what about momentum? You said short-term gauges flipped negative.
Yeah, momentum indicators are flashing red. The engine seems to have stalled, like you said.
Right.
Right now, the path of least resistance, technically speaking, looks downwards. And volatility. It's high. The stock's making big swings, coiling up like it's getting ready for another big move, but the direction is really uncertain.
Okay, so conflicting signals all around. Dilution, overvaluation, stalling momentum, but still positive long-term trend, strong volume, and crazy options activity. Given all of that, what's the strategic outlook? What's the verdict for the next few days, few trading sessions?
Look, weighing everything, our stance for the next several trading sessions is neutral, but with a bearish bias.
Okay, neutral with a bearish bias. Why the bearish lean despite some positive signs?
Well, the risks to that view are definitely those bullish options bets that could ignite a squeeze and that underlying long-term trend and the strong volume we mentioned. Can't ignore those. But the primary driver for the bearish lean right now is that billion-dollar dilution. That's a direct, immediate negative. Combine that with the stock looking overvalued based on fundamentals and the short-term momentum clearly stalling. It's a pretty strong headwind. That option's optimism. Honestly, it feels more like a gamble right now, maybe hoping for a short squeeze or banking on the ES8 launch rather than a reflection of solid fundamentals at this moment.
Right, makes sense. So for you, the listener watching this play out, what are the key levels to keep an eye on this week?
The absolute key battleground is going to be that $6 level. Watch it closely. If the bulls manage to defend $6 and push price back above, say, the pre-market high around $6.16, then they might have a shot at challenging resistance up near $6.50.
And the downside, if $6 break?
If the sellers break below $6 with conviction, with real volume, then the next likely target is down near the recent low, around $5.77.
Okay, and what would change that bearish bias? What's the invalidation point?
Simple enough, a solid, confident close above $6.16. If NIO can reclaim that level and hold it, that would suggest the market has absorbed the dilution news, digested it, and the bulls are regaining control. That would invalidate the immediate bearish lean.
So it really boils down to this. NIO is asking investors to fund the future dream, the growth, the battery swapping, the new models, but it comes at the cost of dilution today. For you, the question is whether that promise of tomorrow is enough to outweigh the pain today. It's definitely a high-stakes game playing out, and, well, someone's about to be proven very wrong. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.